morning, class. Welcome to Homeroom with Unk and Market Monk. Morning, P. How's your week?
Really good. A pretty nice payoff on Enphase. The crypto stocks, I was ready for that Friday rally. I'll talk about that, but I'd been doing these little hedged upside trades, and the put side of it was just carrying the thing for weeks, and but I didn't really change what I was doing. So I can talk about that later. But yeah, overall, really good week for me. Just things are hitting levels. There's still some selling going on. The selling gets aggressive. It's just it doesn't really sustain itself too many days in a row. That's kind of where the 3-2 market came from. So you just have to be ready as some of these things hit levels that you plan to sell on. You just go ahead and do that and don't worry about it, because you take the win, and then you look for new opportunities. So pretty exciting start to the year overall as far as that goes.
You kind of see, a lot of what you talked about come to fruition last week, and luckily I traded. Um, but the rotation to safety are just the boring names. I mean, if
Yeah.
Walmart, Target, PG, Coke, Pepsi, Dow, throw Devin in there too, just because you're so strong on that thesis. But just some boring stuff, totally against the grain last week. If you were in it, made the week a lot easier. Luckily, I'm in it. Um, the
Yeah.
the sector that's kind of like been performing for me, just in general, for, like for good trades or somewhere I've been able to dip, is that clean energy.
Yeah.
GPRE and Klein are good. PCT kind of hanging out, not enough in the flow there. But still, having that, knowing that that's a sector, can throw in Givo and maybe Rig and some other, you know, new age energy in there as well. But did good there. End phase, I love it when I turn bullish, get a pretty decent entry, and then some news comes in, even if it's bullshit news. Um, and then obviously the crypto. I didn't trade a lot of it, P, but I did buy that purple line, couple hundred shares down there. Um, just because, I mean, I have a line on the chart. If it wasn't a good level, if that purple Professor Purple line from back in the day was bullshit, I'd erased it by now. But it's
Yeah.
been,
Yeah.
I
Yeah.
mean,
Yeah.
I think it's 2 years ago. We
Yeah.
put that line on there. Morrow is below that line, and that's where I said I had to make it to kind of just get its head back above water, so to speak. So to see the nice little bounce off there, and it's $100, $200 trade, whatever, but still using the work. That's what using the work is for me. Using the
Yeah.
work isn't coming out with 20 grand at the end of the week. It's being able to find 2 or 300 in the worst conditions or whenever I'm at my computer, so to speak.
Yes. And with Mara and that level, I mean, when Bitcoin was trading at 120, um, and I was thinking a little higher. That didn't hit the upper number. I think 132 or whatever I said. But people weren't thinking about Mara trading down there anytime soon. I mean, I think even like the bullish people may say, well, eventually Bitcoin miners are done, and some of them won't make it, and blah blah blah. But I mean, for that to get to that level now, I mean, it just shows you how those stocks in particular, and especially the ones that don't have the strong data center angle, they're going to outpace any drawdown in Bitcoin because it's so much more expensive to mine coins. Blah blah blah. But the bounces. I mean, they don't even have to retrace half or a quarter or whatever that drawdown, but there's you're gonna find your 20% days in those, and then you often do get some follow through. You just you scale way down your position and let it go, see what happens, and that worked well even for ones like Coin, back in the day. But some of the more established ones, definitely you can kind of get in sort of an investor mode, and that's where your some research and having a clue what these companies actually do, can definitely help you. As far as the rotation goes, I think one thing always to keep in mind that you can do very well on the Dows of the world, but as far as the way that the rotation happens, it's not like you know Nvidia loses 500 million and Dow gains 500 million. Like it's not a there's some of that money is just kind of out of the market, um, but they're putting other money and stashing it in other places, and finding those setups is important. They're often clear as day, and monthly options with some follow through to leaps and all that, and something like Dow, its big drawdown didn't really have a definitive reason you could point to, but it definitely created an opportunity. So I do hope some people got a little piece of that. I see the testimonial page a lot of times is starting to get a lot of stocks like that. And I'm with you on the clean energy thing. I mean, I even see it, and we'll get to this utilities thing but like wind energy, like something like energy. This seems like the absolute worst moment to be thinking about something like that. Trump will just rant about windmills killing birds or whatever, but there's just there's some beaten down names, and there's opportunities, and I think whales are able to kind of look past current administration priorities, and there's a bigger picture there. So I definitely do love to keep an eye on those as well.
Yeah, I mean, crypto, we'll start there because we kind of bounced around a little MVP, but crypto, I don't forget the reason we started trading it. And
Yeah.
I don't even know if that was really we. I think that was in the creation of we were already in it. Um,
Right.
but the first time. But the trade is for the range. I'm gonna be perfectly clear. I sit here and on my high horse every fucking week and tell you guys crypto is nothing but a pet rock. So on the backside of that, I'll let you know why I like those charts, and it's nothing because of the range. I don't believe a company. I just don't. I mean, mining bitcoins, I don't get it. I really don't. It ain't gonna last. Um, I'd rather buy a Hunter Biden painting than a Bitcoin. It has more tangible value than me. So understanding that, I think is like a safe place for me because just has such great range, and I can just trade a chart. I don't fall in love with a thesis. And do I miss the irons in the CLSK data center angle trade for the most part? Sure, I do. But I got a lot of trades over a few years in that sector, and um, elevator elevator stairs up, elevator down. I mean, that's just any market,
Yeah.
and you kind of seen that here. Um, and it might not be over for some things, but the moves are pretty fast down, and you learn to adapt to that or weather that, so to speak, and not just in crypto and everything. Um, Kind of a week behind though. I feel like P, and it's probably because I was on a little vacation there, but um, this earnings season, I've definitely seen it last week. I didn't say it, and I doubled down on it this week. Um, the market's just over evaluated right now. Those big names were trading 60, 70 PE, and they're back down to 30 now. We're talking about the Nvidias and Microsofts and everything but Tesla because its PE is fucking stupid. But you're back to 30, which is kind of a reasonable evaluation for things. Um, and I mean I don't think that's not healthy. Kind of needed in
Yeah.
some regard, but people panicking that this, that, or the other. The multiples have to make sense for big investors to go back into them, and if not, they trim those positions. I watch the CSNBC every day, all day. It's on, and those guys talk about getting out of things just because it's hard for their rules. And Nvidia is one of those names for some of those guys. It just doesn't make sense on the multiple for them. And I'm a flat brain, you know, middle aged day trader, so I don't have as strict the rules, but I need that goddamn ratio to be there. And, I do kind of see
Yeah.
what they see on a lot of the things where the ratio just isn't there. So The check back for me is in the bigger names, like you kind of explained it about money going from one place to another. That's probably a very broad view of what it is. Um, there's the reason for it, and sometimes that
Yeah.
reason is still healthy even though the environment seems bad. So yeah, just a normal correction for me going on. I kind of picked up on that because some of the earnings reports are amazing and they're still getting cut 10, 15, 20%. And it just
Yeah, and I several weeks ago, I follow earnings pretty closely, as you know, kind of understatement. And I just didn't see
nothing.
the look in those, right? And so even the ones that pop off and did pretty well, they give it back, and then they're just going to live in that range,
Mhm.
like Elf, right? And Elf had an entry way below this. Still kept a lot of that position through all that stuff. Sold on the pop. Mainly was focused on. I had the earnings straddle thing going on, and with all of them, pretty much all of them, I have the short expiration put most of the money, and you want that intrinsic value, and you just want to sell that thing when it pops and fades, or just fades and fades more, whatever, and then you can have something longer term or recovery, retrace, like all that. But that definitely is where the market's at, and you talk about that ratio. I mean, when Microsoft was $550, I mean, even though yeah, it's a stock that I think you can just buy anytime and leave it alone,
Yeah.
long term. I mean, I don't know, 15 years from now, it'll be $800 or whatever. But point being though, as far as for now, like you create a ratio or a trade or something like that. When Microsoft pulled back below like 360, 380 last time, and I'm like, okay, there's something here because of that potential for punching through 400, 420, 440, whatever. It went well beyond that. And here, I don't know where however you want to talk about it in TA terms, but the ratio's coming back into it. But there are ones better than this too. I mean, Netflix is much better than this, and um, several others. If Adobe ever gets its shit together, Adobe could double without
Oracle
doing
even for
anything
that.
major as
Yeah.
a company.
That
So
200 SMA on the weekly. I mean, the name that's like the VIP line, right? You don't want
yeah,
to put too
yeah,
many names in there. I mean, you could probably throw Netflix in there, but Microsoft. I mean, that's all you do there. Yeah,
right,
you
right.
don't fall in love with anything but the SMAs, and you're getting it cheaper than the 50 is good. The 200 is just own it, because
Yeah, yeah,
they won't lose. And Netflix, I mean, Netflix historically Netflix is the best example right now because it's traded historically at a 90 PE, and it's at
mhm.
30 right now. So if you're looking for value, I mean, I don't know what else you want. Should it be trading at like 50 instead of 90? Probably, but I mean,
Yeah.
I always go by historical valuations. I mean, that was the target. That was the reason we got a target was trading on 10 PE. I mean, yeah, just shut up and buy that shit.
Yeah, exactly. And then like Costco, like I was really late on Costco at that 715 area, historically speaking, but you know, did
Oh yeah,
did really well there, and there's just companies like this that will kind of weather the drawdowns, and you avoid leverage, and um, just have your plan, have your entry. So plenty of investor mode stuff. There's also I try to come up with ways to describe this, and I won't share any of these tickers in here, but there is definitely a sentiment in these kind of smaller software companies where you read the description, and they don't really seem like they do very much. I mean, when I see a company mention other people's apps and how
yeah.
we optimize other people's apps, like it doesn't really seem necessary, blah blah blah. But the charts themselves, the range, they're in the dirt, and all of a sudden the $8 stock has $10, $12 flow. The $10 stock has $16 and $18 flow, and just as the market has some shitty days, they start building those positions, and they don't do it all at once, and they sort of scale into it. And I don't think most people notice it. I notice it, and kind of been here, done that. And so there's a lot of opportunities. There's opportunities in the Microsofts. There's going to be opportunities in these shitty software companies and crypto and all of that. Still got my eye on oil. We'll talk about the boring stuff, but there's just a lot to like here. And the big red days wake a lot of that up. So I've been at this long enough. I'll shut up for a minute, but I've been at this long enough to kind of know that those buys are all already loaded in their systems, right?
Mm-hmm.
They're not. It's not like they like, oh shit, look at the market today. Let's find something. I mean, they're like, if this, I'm gonna do this. If this happens, we do this, and it's just all already programmed. So as a trader, for me, I try to have that mentality. I don't trade like a whale in terms of order structure, but if this happens, I do this. Aura hits this level, I buy it. Especially if it accelerates to that level rather than, a slow bleed out over 6 months is not what you'd want. But, that was the catastrophic wick down to that level. I'm in. Let's go. And then on the other side, I say thank you. I'll trade this one. I'll sell it. Keep whatever. But if you just as much as you can just automate your own process, not literally within typing out the orders. I mean, maybe you want to do that, but you just make it robotic, and then it becomes like golf or basketball or baseball. You do the same thing over and over again. As long as that thing has successful results, you keep doing that. Then you tweak it, you tinker with it, but you get the basics of the process down, and that's what you should be after.
I definitely got them order templates set up already, P.
Yeah, okay, yeah, yeah.
um, I just had to throw that part in there. Yeah, I listen to you talk. I definitely want to kind of not double down, but highlight. I mean, that's kind of why the safer names are coming up for me so much. Is that's where we can do a better job, and to be honest, we're good enough to do a better job of just getting people and stuff that doesn't come back, or that I don't know, starts you from a swing trader standpoint instead of starts you from a day trader standpoint. Because a lot of people come in the game, maybe catch a good market condition, and have a couple successful trades and think they can short term trade pretty easy, and then you run into the last couple weeks like this, and you just get fucking throttled. Whereas if you would have started for more of that, I do have a job, I do have to go to a meeting, let me just buy some fucking Target and go back to work, and you're up 20-25% in a month. I think your brain would react a little different to what you're looking for. So just in general, be open and honest. That's what I'm trying to put out there a little bit more for people, because
Yeah.
what I hear back is that lack of time, or not being ready, and that's how it relates to what you say, because you have to have that shit. Especially if you don't have time, you better know what you're gonna do. And I almost want to start for our group somehow, P, like Monday morning homework, where you just
Mhm.
drop three tickers in your plan. I mean, and that's gonna force people to do that, and say, hey, I'm gonna buy here this week. Maybe start looking at the weekly wicks, because a lot of people, I have trouble finding entry. Well, get the fuck off the 5 minute chart. I mean, it's hard as
Yeah.
shit to get on that. If you go find a weekly wick and say, hey, I'm here. This price is held right in here the last 3 weeks, and it's been offered. It's not that hard to have those basic rules, but it's needed. 100% in my opinion. Which leads me to the Unk rant. Sorry if I went a little long. I'll keep
Yeah.
this short, but fuck. I mean, from my man Carlos to my new man Jason to anyone I talk to that's a little pinched on time, the main problem I see across the fucking board, and it's one of my main skills, which is why it just drives me crazy that we can't get it across, is the scaling. And it's on both sides of it. And the analogy I came up with, which is just pure fucking gold, you're gonna love this. you traded baseball cards and shit or Pokemon cards for them younger kids, but me and you, baseball cards, we traded them. We had
Yeah.
boxes of them. You didn't buy a bag of fucking tops, and I bought an upper deck, and you bought a Fleer, and then be like, hey, you want to trade this tops for the Fleer pack? Never.
Yeah.
You
Yeah.
opened the fucking cards up and you sorted through them, and you had different ones, and ones were worth a little bit more, a little bit less. You already had them, whatever. And that
Yeah.
relates to trading with your scaling. You don't just buy the whole goddamn pack and sell the whole goddamn pack.
Yeah.
Because one card you might get 950 for, one card you might get 875 for. And learning how
Right.
to get in and out of the trade, you do it magically on the downside really well. If you guys want to pick up a swing trading thing from the professor, it's how to just kind of slowly buy red. Because I mean, I know the professor a little bit. He's not buying $3,000 of in phase at a time down there in the 31, 32, 30. As it drops to the fucking floor. I guarantee you those are 30 to $120 ads at a time, and that's how that
Yeah.
motherfucker wins on in phase. I know because I win on stuff like that all the time, and it's being able to buy $40 of bullshit every day to get a good price, and the same on the other end. Well, we ran 20% today. We'll take something. I don't care if it's
Yeah.
10%, a quarter, half. I mean, I stressed 2 trades. I would be much more happier if y'all did 10 trades. And I'm going to stop the rant there because I know you have plenty to say.
Oh yeah. Yeah. For sure. The and this this with MSTR, and I'm not gonna single anybody out because I don't remember who it was, to be honest, but they're on the way I described that trade, and the some of it's is option heavy until recently it started to started getting on shares. But anyway, I would get, like, someone would say, hey, do you think my December, whatever the number was, my December, 40% out of the money, whatever call, what do you think I should do with that? And I just was sort of like dumbfounded, like, why do you have that? What about anything that I've said about this stock indicates that you would trade it that way, that you would try to, diamond hand a put on it, or whatever. And so so that isn't isn't really how you do the red buys. I mean, especially with options, but even with shares, if you were trading along these levels, and then pretty clear that they were breaking down, but I still would go long with time and then do the put, and whatever. And it was just it was that same thing, um, over and over again. And as far as scaling out in that world, you have to take your money quickly. Runners have to actually be running, and there's plenty of times you do a hedged upside trade, you go ahead and just close the whole thing if that whole thing's green, and then you can, and then you can do it again, and over and over. So I would just encourage people, when you see something pop 26% like it did Friday, um, it's definitely potentially the start of something rather than dead cat, or whatever. But you have to just go at it with fresh eyes, take a fresh look at it. Better example probably is end phase, and you can kind of see what we've been doing here. You can see the lines I have on this, and I remember when 78.28, I was like, "Hey, Unc, here we fucking go," and you're like, "No." I'm like, "Okay, well, shit." And so I still traded it that whole time. That 60 drop, and then retest and whatever. But it became something different that second time it broke down at 60, and then I wanted to do something different with it. Unresolved flow at 40, and then 32 came up, and 32 built over a longer period of time. I mean, you can just see it on the chart there. And so yeah, so that's where I got into it. And but I sold several times. That first trip of 32, I didn't round trip on those 40 tests. I got out of most of it, and then went for another round of it. That last earnings drop, that's where I really started to buy some pain. I mean, down. I bought all the way down there, almost every day, like you said, and it's what I did with Oklo. Um, the Oklo trade really is what gave me the confidence to not just see a trade like this, but to really act upon it. And so yeah, so that's what I did, and I was sharing memes and joking about Enphase the whole time, and built up an average. The full thing went red for a while. I didn't
Oh, sure, sure.
panic and buy extra at that point. I think that's one important thing about scaling is not to panic and buy extra. I mean, it's tempting mathematically to say like, well, I can cut my average in half or more, way more if I buy 75% more than what I have. Look at that average I can get. But that's not really a smart way to do it. You become the community member and then the conspiracy theorist. I mean, how many people did that with AMC? That
Sure.
imagine the averages. I don't know what's a like disgusting average for AMC to you, like,
18.
okay, I was just yeah, that right. And so you take 18 and you buy all the way down, and now you got this average. Let's say it's like $6, and it's trading for 150 or whatever. And it's this huge chunk of money that's down, and you're just kind of hopeless. But that's where the floors come in, and the put floor, the bid side, all of that, and we're gonna see over the next month or two uh, how little people know about reading the bid side and options, and I'll try to um, share a little bit more of my curriculum as far as that goes, but that's going to be pretty crucial for us too.
The thing about Enphase make me laugh a little bit, not to get too much on one stock, but is where I kind of started trading it. I mean, I I kind of pounded the timing is everything table there. I mean, there's a little luck to it too, but it had. I mean, I didn't get 28s. I didn't get 30s. You know what I mean? I didn't get nothing like that, and that's part of the reason I was right. Is because I
Yeah,
waited for the trend, to be honest with you. But taking the 32s to what I thought would be 37s, and it actually pumping to 40 rather quickly. Um, the funny part to me is that we kind of have the same runners left, so to speak.
yeah,
Over there, the same position size, and
right, right.
I
Yeah,
guarantee I
the
guarantee
my,
you didn't
my
have
shares have a few more black eyes than yours. That's what I
yeah,
was.
well, and
Yeah,
I
yeah.
think you had a bit more sizing than me too, which is
I
probably
did, and I had
backwards
to,
from our
and
stuff.
and there were options along the way too, including on the downside. So
Sure.
I used that to buy the shares, basically, and that was a big change for me in options. And I'm probably still in options too much.
Sure.
I'm that's fine.
Sure.
But I like the trend I'm in, and I don't like to shake things up too much of what I do. I like to just sort of do things for a while and then assess. And for me, the
Doesn't pay.
the you know the off season analogy in sports, like when you're in the season, you can tinker. There's only so much you can do. You don't install a new offense during the season.
Sure.
The teams that do that, the coaches get fired or whatever. But over the holidays, that's always an opportunity to do that. There's some slow periods in the spring, when I'll do that. But anyway, another one real quick, and then I'll get to the boring stuff.
Well, let me have,
SMC.
let me. I want to throw one
Oh,
point
right.
out there. That trade, the in phase trade. I mean, I'm probably gonna look at $600-700 off that trade. Pretty low stress trade. I think you did a little better than me on that trade, but the stress was a
Yeah.
lot more. So
Oh, sure. Yeah, yeah.
that ROI we always talk about. That's a good A and B comparison of
Ye-
positive trades for both of us, but just different
Yeah.
paths.
And here's the thing too. You talk about you want to see the trend trade, the trend change. You got to see it on price action. I saw the trend change in the option flow. And the thing about trading on a trend change in option flow is that whales will go red and they don't give a fuck about it because they know what they're going to do. Um, it's harder to follow them into that.
Sure.
Um, because you watch your account take a hit on some of those drops, and I mean that's why you can see my message that I was like I'm selling a shitload of Enphase here, and that was before it might have popped another 15 or 20% after that. But the reason was I'm not. Am I going to sleep tonight if if I'm holding Enphase overnight like with this much? Like no. So I had to just I had to just scale that back, and it wasn't even quite to the point of runners, but then I got to that in that morning. You got that nice surge, and then kind of called it good. Did a couple option scalps after that, but anyway, so at SMCI, at this one was pretty simple. I'd love that line at 22.93 to come back. It's not going to unless they get news. So anyway, so next best thing was under 30, under 30, under 30. It just it made sense on many levels. I'm sure there's a TA reason, that pops up. Option flow, you linger under 30, they got to reposition. They don't like to do that. Coming up on earnings, got this huge gap above, whatever. Ratios all there. Well, that gave you under 30 again, and it really I posted it in our chat when it happened, and I'm like, 30 doesn't last. I just keep redoing that, and you had about under 15 minutes, to deal with that. So that's where just setting alerts is so important. And if you did hold through the pop, the fade, well, now it popped back up. I will say if you get lucky in that respect, and that does happen, like I didn't sell something, I missed this, it had this fade, and now it's all the way back. Don't make the same mistake twice. I guess what I would say is go ahead and just clear out some. But I mean, you talk about responding to a level. That one's a little crazy. I mean, you're not trading Dow, something that can pop to 35, back to 29, 34, 38 within a span of 3 days. So know what you're trading, I guess, on one like that.
Yeah, no, and I mean that's another good one of just kind of take the percent, that two trades, take the percent on the first one, and
Yeah.
kind of keep what you're going to keep if you do think we're going to get the 40 test, or if you think there's a bigger thesis there. Um,
Right.
yeah, no, there's a ton of that offered right now. A tradable range with bigger thesis, I think, is where you want to be. Stuff that's marching to its own drum, so to speak.
Yeah.
Yeah, no, I mean we're good at that. We're good at like uh, when you said the flow, the wells like go red on trades. My initial thought when you were saying that was like the flow's always late. Like it's not an indicator to buy like a TA spot on the chart
Yeah. Yeah.
is, right? Like Mara's
Yeah.
probably going to have some flow this week, clear some things up for you, whether we're going to go back to 10 or not.
Yes.
Long term
Yeah.
stuff like that, but that TA is a little quicker, and it's not a disadvantage, but it is a disadvantage if you use it the wrong way. And I think that's where you're really starting to level up, because you would I forgot how you used to say it with your TA, but I think you're starting to lean a little more on the TA side, because that's an integral piece to the equation as well, or a safety net to the equation as well.
Yeah. Yeah. Well, I mean this this isn't something to this is before we start working together. But when I first started to get a handle on option flow, and then it was working with energy, and I was just like, well, I don't even need to look at the chart. What's the point of that? I'll just look at the option flow.
Yeah.
You definitely don't want to do that. All right. So, but it definitely in building something, it's where the two things converge. And I I have my own method of coming up with levels, and I intentionally stay out of your system for it, because I want to see where those two line up, and what really came out of that I didn't anticipate or anything, but is where you get these brackets. Like you got your level, bracket above, bracket below, and then we trade around that and do it very well. And then we're arguing over a couple bucks on a Tesla level. Well, if you pick a side in that argument in this room, you bought either one of them, you're doing pretty well on Tesla. So that's a repeatable part of the work too. And the longer we do this and build more history and build more levels, like it just gets better and better. So definitely in this current drawdown, one of the reasons I think it's so important is that a lot of these stocks flew way past a level where our systems can build much of anything. There's just an all-time high flow on my end, and now that a lot of a lot of those former all-time high charts, they pull back, and it's like, okay, now we got something. It's something even beyond just that hitting that 200, but building a real history, real level over time at a higher spot. Something like MDB build some more history right here. Um, Snow might revisit our levels, but it might build something higher up here too. So definitely looking forward to that over the next couple months.
Yeah, no, I definitely last point on that. I definitely took the whales can't hide from your side and tried to find that same theory on my side with the shares and in the levels
Yeah.
and whatnot, and fucking works. I don't know how many times you need to see level hit, flow kick in, for
Yeah.
to trust it. But sorry, I have one more last thing on that. P, what the still the best for me, and it's it's just kind of being brutally honest, but it's when I trust the level with no flow, and I still see 10-15% in a chart, and I'm able to get into that trade, and then you're like a week, the 10 or 15% is there. I'm at 12. Just put it right in the middle, and you come in and say, "Oh wait, this is good now."
Yeah. Yeah. Yeah.
That's still
Well,
my best trades.
yeah. Yeah.
Because
Yeah.
it's just that TA first.
Whales just they have their process, and I follow what I see. There
Exactly.
are some where I anticipate what I think is going to happen, and then I'll trade a few based on that. I did that with ARM, and secondary asked me about that. Then I said, I was like, this looked bleak after hours, and the reason was that I don't know if it was a hedge or an outlier or whatever, but there's somebody that with um, 90 the 90 puts heavily sold, and it's like if they got upside down on that, they'd be in some trouble. And so I was like, they're gonna probably bounce this, so just get it at or under 100, and you're good. And then it, like sometimes happens, well exceeded what I thought it was going to do. Um, ends up going over 123, whereas I thought 110, 111, 112 probably be where we park, and then into next week maybe do this. Um, but yeah, so that was one where the um, you can get ahead of your skis and be all right if you kind of know the slope a bit. And that
Yeah.
was
Well, for me on the other side, I mean, you just flip that whole thing over, and like, I would much rather have what I said than the stock move 12%, and then you say this from my level, and then you go, this is a good read now, because then I have that 12% downside to manage still, as opposed to
yes,
buying
yeah,
off my level. So,
right. Yep.
um, you want to go boring stuff? Is that where we're going?
Yeah. Let's do
I
it.
got one thing. I was gonna put this in real quick because kind of not important, but I'm trying to add our page. But we were talking about scaling, and this right here is why scaling is important. I mean, this man is a legend at it. But Rig, if you look at this first data on Rig, it's 321.25 for our old boy Pele, and this is what scaling out looks like. This is what two trades looks like. And what I want to point out here is these smaller percentages to start with. You know, you get your
Mhm.
10s and your 20s, but you're 75 and 80 if you just stick with the goddamn trade.
Right, right. Yeah.
And these aren't full decks of cards. You know, this might be
Yeah.
Barry Bonds. This was a Craig Biggio.
Yeah.
This is this was a Cal Ripken, gold trim
Yeah.
card. So yeah. You gotta master that, and he's one of the best at it in our room that's I've ever seen. So there's money in it. Boring stuff, P.
Yeah. Yeah, absolutely. And I mean it's other than I guess I would say oil's my favorite. Maybe it's just where I live and who I know and stuff. But after that is when you're like paint, flooring, like
Oh yeah,
I
yeah.
mean just stuff like that. Just that you can get kind of over time and the and even auto parts and whatever Fastenal and things like that. Just
What about bleach?
yeah, there you go. Yeah, yeah, bleach and soap and whatever. It's definitely you want a piece of that stuff. And even there have been great spots for Coca-Cola in here and Pepsi
Bud,
um, and
Bud.
Bud. Yeah, and I mean it was what's funny about the I'll get to the boring after this, but the booze trade that I've been on and I found some that I mean there was one ticker you're like I don't even know what this is or I can't find this ticker
Oh
and it
yeah, yeah,
was
yeah. The
it's I
BF
mean
one.
it's Jack Daniels, right? So but it's sort of it's weird, it's obscure, whatever. But I see lots of flow there. But the funny thing about that trade activating this Americana Renaissance thing, Bud came first, and it was basically a gift from their whole PR disaster. There's no way it should have been trading down there. I don't care what influencer drank a Bud Light on Instagram. I mean, whatever. That's all noise. But I mean that opportunity, you are set up very well. Same with tobacco. Like if I'm getting bullish on tobacco now, the best entry on Mo and some of those was months and months ago, and now it's like if you can get in a position where you already have you're way up on and it's the start of something, that's definitely where you want to be. And it was the same thing happened in semiconductors and quantum and whatever. You get in on the big story early, and then have fun with it once everybody figures it out, and then you figure out what how to exit or what to keep, whatever. So that's what I try to do. Other than reading flow, trying to identify the big narrative, the big story, how it's tradable. That's what we'll continue to try to do that too.
All I gotta say about Budweiser is, it's your shot, Greg.
Yeah. So all right, so we'll get into the boring we'll start with copper like I usually do. Um, really get some fat candles and I don't so actually I'll ask you this. Just forget it's copper whatever, but you start seeing fat daily candles like this. What does it tell you about what's going on? I mean, especially after you get this big surge and then you get huge daily candles just sort of in a this large range, this 560 to 640 whatever. What
it's
does that
not.
tell you about what's going on?
Price discovery is supposed to be like in a new zone. It doesn't really apply to commodities as well, or
Right,
stuff
right.
like that. But I mean, it's the same thesis or same theory for me. It's looking for buyers and sellers in a range where there just isn't any.
Yeah. Yeah.
Usually in the share side, or I don't know as much about the commodity side except for the what's happened in gold and silver lately. But usually it's because someone's off sides. They're covering, or they're over
Yeah.
leveraged in some fashion, and they need to cover, and they have to pay a premium for it. That's when you get these candles. Um,
Well,
I,
when you have
it could be something as simple as someone sold a 550 call, right, or a $5
yeah.
call, and they don't have the shares and they need to get them, right. I mean, it could just be as simple as that. Um,
Well,
yeah, because
commodity you sometimes have to physically delivered things.
Yeah, yeah. So
That's
that's
the
different in the
weird.
commodity
Yeah.
side, but when you get that range, it's because it's just looking for, there's not buyers and sellers there. It's just not a normal market price or yeah, yeah. I mean, and then you see it pull back to somewhere where there's going to be a tradable range or more buyers and sellers
Well, I
in
you
that
know
in that
I
range.
think I when silver was still printing those fat green candles before this drawdown, I think I said, and I sort of undersold what could happen. I was like, don't be surprised if 5 to 7% drops in a day in silver. I didn't think 30 or whatever that day was,
Sure.
but that was we were at that moment where I'm like, this is gonna start to happen, and I do like the price discovery um, analogy, and that as far as the at that time, it wasn't like I saw okay, here's POS puts 20% out of the money, um, unresolved flow. It didn't look like that. I mean, they were so far up on anything option related,
Sure.
they just kept rolling, and they'll just take some of that shit to zero at this point. And they reposition in other ways. And so the flow picture, I think it's going to take a while for metals to show some kind of sustained move and flow. I just think the chaos is going to continue to dominate. So you can still trade that stuff, and it's gonna have better range than usual. The implied volatility is elevated, so you got to be careful with the options. And for me, I mean, it's simple to say like you want to buy low IV and sell high IV. Like that's basics option, right? But for me, like I don't like it when something that like I got into because the IV was low. Now it's got this new reality. I don't like it because it gets crowded, and those premiums suffer. Where, I mean, it would be unthinkable a year ago to say, well, a 5% move for AG is not enough on the option side. Like your contract's going to go down anyway because it moved 5 and not 15. That isn't where you want to be at all. So yeah, I think chaos still dominates here. I would say that silver, as far as high or low or whatever, or stability, probably in the 70s or 80s, and then we go from there. But it needs time before you even think about some new long term entry. Buying physical, yeah, probably a good time to keep doing that, but I'd just be careful on the share side.
Yeah, the TA standpoint, it's just the events on the chart. Don't put too much into the event that happened. Not that it's a blip, but um, it'll level back out. Be realistic.
Yeah. All right. Then oil. Um, I like what's going on here. The again, just that sort of you stay above 60, and you got your flow setups, and that's all good. So just you'll see more there. The I mean, it's funny to me to see people. There'll be these energy accounts on Twitter, and they're just now talking about oil field services. And I mean, that was the rig trade for one thing, and there were others, but it's like just now, and they have all these charts that uh, I don't like. I don't know how you feel about it, but I don't like charts that combine different things. It's like you're just sort of creating your evidence. Like, well, here's Bitcoin against silver. Here's oil field charts against compared to mega caps, and they chart it out, and then they do TA on the chart they invented. I just think you do this, the same thing. Dollars. This is how many dollars this is, and I don't like to. I think you could compare things, but you have to you know just do them for what they are. You don't compare apples and oranges and then talk about the price of tangerines.
That's
To me.
just a 50-50 flip, and you hope you're right.
Yeah,
that makes that out. I like to call bullshit out, so that's some bullshit. I
yeah,
mean,
yeah.
it's I have a pretty straightforward system, you know, with the historical levels, volume P, the SMAs, the daily levels, you know, support and resistance flips from higher lows that are shown on the 1 and 3 year, yada 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 yada. But even then, I mean, I find what's respected, and then you got to make a decision whether it's gonna be respected. I mean,
Yeah.
that's when what they're doing isn't even fucking close to that. So yeah, I don't
Right.
know.
It was like the. I remember the first time I shared the phrase "anchored COVID VWAP" with you.
Yeah, that's fucking stupid.
Yeah, you're just like, what the hell is that? But then on to natural gas. Yeah, I mean, you had the pop and fade and all that. Big picture's still the same. Time to accumulate some new ones, I think.
Yeah.
Um,
Oh, I got to get this out because I've been wanting to say this for a while. The anyone that says volume price analysis and not volume profile analysis ain't doing what I do. It may look
oh yeah,
like it,
yeah,
but they're not
right,
doing
right,
what I do. They
yeah,
just read the book. All right, I'm
right,
done.
yeah. So yeah, I think you just build here above three. I don't care, kind of you have to look at this like I don't care how long it takes, because the trade here is not like, oh, I hope we get some more cold weather. You do get some volatility on those events, but there's a bigger picture here, and it's international, and it's also narrative of clean energy. We mentioned clean energy earlier. This is in that basket, and people don't know it yet. I get that's
I like that we because a lot of times you say we and it's just you including me, but that one
yeah,
I get a little payback right there, so I appreciate you.
yeah.
When you zoom out on this chart, this is kind of for you. No, go to like a weekly or a monthly for me. Like go real. Just go as big as that goddamn thing will go. Yeah, just put on the monthly. That'll work. Um, where do you see like natural gas should be? I mean, is it 350? Is that kind of what a realistic market should be without some fucking chaos? And then where's the premium at? So is five the premium? I think that's important for this story going forward because we have the names, we have the spots on the charts. It's understanding where this price should go and then seeing it on your end, like you do.
uh, yeah. I mean, I think that three is was where it should be for a long time, and I think five
The new normal.
is the new reality, just based on expanding markets and um, demand and controlling supply, and like all those things factor together. I think they want to set a new reality at five. That's that's where the 5 to 7 trade comes from to me.
What
So
really stands out on this chart too is, I mean, you have some pretty catastrophic events: COVID, the housing crisis, the .com, all that yada yada yada. Is all on this chart we're looking at, and
yeah,
the lows, the lows really aren't far from here, right? They're just not.
right.
The 220, 250 is just like as cheap as you get. So, in general, from that side, there's just not a lot of downside from here.
Yeah, no, absolutely, and this is where I mean, people, they sort of joke about kind of the misery of being a natural gas trader. Um, as a trader, it's great. As a investor, like you're gonna sit through every one of those drawdowns and just keep it all the whole time. And then you compare that to Apple or Microsoft.
Yeah.
I mean, yeah, no, you don't want to be doing that, but this is yeah, this is where you want it. And the lower twos that or the just the under three that came up, um, that that's where you do just grab it and then keep some. And that this last time that we didn't go back to two was important,
Yes.
and why I really started to try to pound the table. And the reason I pounded the table on the combos was that honestly it was easier than hedging because those weren't gonna get they weren't gonna outpace the losses if this did get into the lower twos again. you were still fine in AR and some of those. It wasn't gonna just go 1-to-1 on the chart, but you get that solid entry and you get that more sustained upside, and so that's where we're at on this.
I like how we always talk about what's next. Boom, boom.
Yeah.
All right.
uh, China. I almost had China as a sector focus today, or for this week, but I wasn't really sure how I would talk about that. But I will just say, like, I can just pick out 6 Chinese stocks, and but they're all over the map. Like, there's an EV, there's an
Sure.
AI stock, there's an education stock, there's
Is there
some
a real estate?
bullshit gaming app,
How
there's a
about?
real estate
Okay,
one.
yeah. There you go.
So I don't, as a sector, I don't know if it works to talk about it as a sector, but yeah, get a piece of some Chinese stuff. You'll do all right.
I mean, we mentioned that a few months ago, and I had some really shitty names that I brought, and those did well. They're thank you trades, or
Yeah.
two trades. If we say 2 trades, let's just call them 3 trades to really stress that one fucking home. But we said last week, I'll double down on it here. The relationship right now with China is shit. We don't like each other. We dated the same girl and we just don't get along.
Yeah.
If we become friends again, more Eskimo brothers or something, those stocks are 1 to 2x from here. They just are everything except for Baba. Um,
Yes.
I would say
Yeah.
that on.
Yeah. And Baba had, it offered the entry you wanted,
Yeah,
and you didn't
Christ.
buy it, forget about it.
Yeah.
Get something else.
What up, Ewan?
Yeah. And so all right, I'm gonna do Bitcoin last. So I'll
Sure,
do
that's fine. That's fine.
yeah, the 10-year. Uh,
Perfect.
yeah, love it. Love where it's at. Go ahead and park here for a while, and that's all good. It'll give you your some fat candles on a day, and then it'll come back. And as long as it just keeps finding that equilibrium, then you're in pretty good shape here. So that's what you want to see. And then um, the dollar, it's avoided avoided the big surge, also avoided the continued kind of catastrophic drawdown. It's another one that you just want to stay quiet. I think 98, 99 probably better for it, but again, just one to monitor. Obviously, you don't really trade this thing, but if this just has a day where it goes nuts, you know, you're gonna have some thank you trades, but make sure you just say thank you and move on.
Perfect.
And finally, big star, Bitcoin. Get off this monthly.
Damn it! Hoping I was gonna keep you there for like a week.
I'll go above the minute, but yeah.
Give me 15. Yeah, get 15. 1 hour, even better. Love it.
Okay, yeah. So yeah, so this is where it's definitely setting up for some opportunity. That wick down to 60, definitely burned some late shorts, or even someone who they had a chance to cash out there, but it didn't last, and now they were like, well, I'll just wait, and then it ripped their face a bit. That's kind of normal how it is. But we talked about Bitcoin getting into the 60s, and the that 50% drawdowns are normal in Bitcoin, and then it's about kind of what it does from there. So yeah, so going to be some wild days. Going to be a lot of flow reads here, and as far as the for me for the MSTR thing, worked perfectly where the calls had time. He kept some. The puts made it free, and then even getting back to entry on the calls just adds to the success of that trade. So just going to continue to watch that list some new trades, whatever. Share side, your Mara is going to have its own plan. BitDeer is going to have its own plan. The data center ones, all that. So you'll it all happened too quickly to be a sector focus for me, but it is a sector focus. So you'll see me talking about a lot of crypto this week.
Yeah, I mean, I just get frustrated. I mean, we do it with Spy and QQQ a little bit, um, and then Bitcoin. But these fucking mop heads on Twitter know Bitcoin, and like there's the bottoms in the just their keyword bullshit. Where we're just sat in this fucking session last week and said, 72 is probably going to be checked out. That's the level we want to see. We're sitting here,
Yeah,
a week later at 71. You got a little relief if you kind of had the plan of 72. That oversoldness is where you attacked, and now you're just looking for consolidation here. The charts have divergence in them. I mean, we just talk so fucking different than those goddamn kids, and I'm tired of it,
yeah,
B.
right.
Fucking tired of it. So, man, I don't know what else to say. But if you really want to know how to trade Bitcoin charts, the stocks around it, stuff that's safer, there's a fucking link somewhere. Sorry.
Yeah, absolutely. And real quick, I'll do a real quick spy look, and then we'll wrap it
Bro,
up.
I got a shitty candle, like one of them shitty candles. I don't know if it's just me. I'm gonna ask anybody else, but no, fucking Schwab does this occasionally, but this
Oh
daily.
yeah, yeah,
Look at this thing, man. It went down all the way to like $69 or some shit like that. Yeah. So I think
yeah,
it's a
yeah.
glitch in the system, but
Right,
um,
right.
they were talking about it on
No, but yeah, I mean, if you have any kind of conspiracy theorist impulse in you, you definitely do kind of notice
Well,
things like
I've been noticing those on some other charts. I brought it up a few weeks ago. Like I don't know what's going on, but those charts all went up. They didn't go
yeah,
down. I'm just gonna say
right,
that out loud.
yeah,
690, or excuse me, 700. Fucking market's afraid of it. I've been saying it for a goddamn month. But
yeah.
the other end was 660. That was the target going into the year. Just seems like that's where we're stuck. P. That's pretty much what I have to add to this conversation.
Yeah. So I will say that on my end, June 630 is would probably be the kind of the one that doesn't have a
50.
companion or anything right now, but I would expect what I'd expect. I do think you'll probably see some sort of 660 or 670 contract popping up, and then any market correction is going to land between 630 and 670. Then that's the
630 is your 50 SMA on the weekly.
yeah, and I think I mean it's kind of it's maybe a little it's kind of seems dumb that's what they do. Well, let's just put a strike right there, but that is what they do, and you just keep it
Exactly what they
simple.
do.
And so that is how they build a hedge, and that's what it is. It's not a it's not a perma bear whale with a target that we're going to hit this number. That's just where the hedge is, and it's like if this happens, then this happens. We cover our ass down here. This contract's trading at $1,000. It's going to spike to 1,500, $1,600 probably several times, and then they maneuver around it. There's 150,000 of them. So um, that's an important one. And I mean the thing you have to understand about Spy, uh, 550,000 contracts on the zero DTE stuff will be traded, but you have to get past caring about that, and you have to look longer term, lower open interest. That's where the story is. Every day, it's going to trade hundreds of thousands of contracts. Every one of the, I mean, like 550, 391, 346, 321, whatever. And so many people who read Flow, like they build it in such a way that like that's all they're looking at, volume. They just want that, like all that volume. The bigger story are in these positions that they build over time, and I don't care that they only 500 and something, 494 contracts were traded on Friday, but it still is to me right now the most important spy contract that's out there. And I just want to see what else they build around it. But I would anticipate it's going to be that that 660 area, and then we go from there.
Perfect. Love it. What you got? Who you got in the game? I got 37-31 Hawks, of course.
Oh, yeah, I like Seattle to cover. I just think too many weapons. Smith and Jigba, Cooper Cup over in the slot. Running back's really good. It'd be nice if they had Charbonnet too, but yeah, I think there's just too much. And then defenses are kind of a wash, but Mays fumbles a lot, so I'll say like 35-24, probably my score.
Perfect. Awesome. You ready to work?
Yeah, yep. Oh wait, which halftime show you watching? No, just kidding. I'm not
Like and subscribe. Link somewhere, people.